But let me show you the good news for long-term silver investors. Let me get this on the log scale. Many of you have probably seen a chart similar to this, and this is a 40-year cup and handle chart on the price of silver. And this is a pretty chart, and it's a bullish chart. Now, once we break above 50 for good and we close above $50 using conservative assumptions of about $96 silver. Right now, we're battling right at 4,000. So as I look, we're at $4,018. So just above that key $4,000 level, that's initial support. It'll be interesting to see if with this month, because today is the last day of the week and of the month. So it'll be interesting to see if we close the month back above 4,000. If 4,000 were to fail, there's really nice support down at 3,500. 3,500 would be a healthy pullback and a welcome pullback, to be honest with you. It wouldn't feel very comfortable at the time. We got up as high as 4,400.
Steve Penny, a respected metals analyst, points to what he calls one of the most bullish long-term formations in the entire commodity space, the 40-year cup and handle pattern in silver. On a logarithmic scale, the structure reveals that once silver decisively breaks above the $50 resistance, the next conservative target sits near $96 per ounce. Despite short-term volatility, Penny views the current pullback as both healthy and necessary for the next major advance. With gold holding around the $4,000 level, he notes that support near $3,500 would offer a strong base for renewed momentum. His message is clear that this is the quiet phase before the next explosive leg in silver's multi-decade breakout. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
Yeah, it hasn't been surprising at all. I mean, all the caution signals were piling up, as we mentioned in that last interview. The COT was extremely bearish. We haven't gotten the COT now because of the government shutdown, but the banks were heavily short silver. You've had a lot of euphoric optimism, a lot of kind of weak-handed momentum chasers, people who don't understand the bullish fundamentals for silver were hopping on. Why? Because it's going up. And I think, we needed this pullback to kind of shake loose some of those weak-handed momentum chasers. And that we're in the early stages of that. I do think there's a good chance there's more to go to the downside. And as always, strategy is greater than predictions. I've got my long-term positions and I'm well positioned if silver just keeps going higher. And I do expect in the fullness of time, well into the triple-digit silver. So I'm as bullish as you could possibly be long-term before people kind of criticize me in the comments for being, maybe short-term cautious and still think there's a little bit more downside. I'm looking at support down near $40, potentially even down near $35 silver. I mean, I'm not expecting that, but it's within the realm of possibility. Okay, so this is a chart that I've been sharing quite a bit the last few months, and I had been labeling this chart the roadmap to $50 silver, and that was a popular label. People did like to hear that, roadmap to 50, and we were projecting $50 silver into September or October. So this chart has been very accurate as a roadmap up to 50, and that was a popular message. What's not so popular is that we're overbought against resistance, and there's a confluence of resistance right here, right now. We're still overbought. You've got this long upper wick on this monthly candlestick, although today's bounce is kind of making that candle look, less ominous than it did before today. But still, you've got this long upper wick, we're below 50. So you could make a case that, hey, we've got this long upper wick, we closed below 50, it was a false breakout above 50, and we probably need a few months at least of consolidation before going and making a new high above, this high here of precisely 53.76 was the intra-month high, 53.76. I think there's a good chance we're going to need a few months of consolidation before breaking above that level. Now, the good news, so that's probably not welcome news to a lot of people, but let me show you the good news for long-term silver investors. Let me get this on the log scale. Many of you have probably seen a chart similar to this, and this is a 40-year cup and handle chart on the price of silver, and this is a pretty chart, and it's a bullish chart. Now, once we break above 50 for good and we close above $50, that gives us a measured move target using conservative assumptions of about $96 silver. And the way you get that measured move target is you take $50, which is major resistance, and then you subtract the low down here, which is around $4. So 50 minus 4 is $46. 46 plus 50 is 96. So you kind of like take this chart and flip it over, and that gives you a measured move target up near $96 silver. But what confirms that breakout is a monthly close back above 50 and then making a higher high above 53 on the futures contract, or 54.47 as high as we got on this spot price that I'm looking at here. Yeah, for gold for sure. Let me pull up this long-term log scale chart. I like to go big to small. Similar to $50 being a key battle line in silver, I think $4,000 is a key battle line in gold. And just like we've got this long upper wick in silver, we've also got this long upper wick in the price of gold. That's a rejection of higher prices and indicates profit taking. Not surprising after this big run here. You've got key support down at 3,500. And right now we're battling right at 4,000. So as I look, we're at $4,018. So just above that key $4,000 level, that's initial support. It'll be interesting to see if with this month, because today is the last day of the week and of the month. So it'll be interesting to see if we close the month back above 4,000. But if 4,000 were to fail, there's really nice support down at 3,500. 3,500 would be a healthy pullback and a welcome pullback, to be honest with you. It wouldn't feel very comfortable at the time. We got up as high as 4,400. Well, if we pulled back to 3,500, that represents a 20% pullback. 20% pullbacks in a volatile metal like gold happen all the time. And you often get the sharpest pullbacks within the context of bull markets. So here's the potential path, kind of like a bounce here and then a lower low down towards this $3,500 area. Now, remember, to take every forecast with a grain of salt, including my own. Strategy is greater than predictions. So I'm not, it's not like I'm all out. I'm well positioned if these metals were just to continue running higher. But I've also got opportunity fund capital available in the event that we do get a pullback, which is looking like a very good probability here. This is exactly what's going to happen. I'm assigning maybe a 55%, 60% probability of this is the outcome. So 40% chance I could be totally wrong, but I think there's a pretty greater than 50-50 chance that we get a spike in the dollar. And if we get a sharp spike in the dollar, that could coincide with a deflationary impulse, a sharp pullback across, the general equity markets. And if that were to happen, I think the Fed's reaction to such a panic-driven sell-off would be the spark, the catalyst for silver, gold, our focus sectors to really see that big run we've all been expecting. Triple-digit silver is going to be the Fed's reaction to the next panic, which could be closer than many think. I'm watching that dollar chart really closely.
Steve Penny explains that the recent volatility in silver and gold is part of a natural and necessary cycle within a larger bull market. Despite the emotional reaction from short-term traders, he views the correction as a healthy reset that clears out speculative excess. Silver's 40-year cup and handle formation remains intact, with $50 acting as the decisive breakout level toward a long-term measured move near $96. Gold mirrors this pattern, with $4,000 as key support and $3,500 offering a potential buying opportunity if tested. Penny emphasizes strategy over prediction, holding core positions while keeping capital ready for opportunity. In his view, the coming Fed response to market stress could ignite the next powerful leg higher in both metals. Let's get into the interview.
Yeah, and last time we spoke, I said the two most important charts to watch for October are, one, this monthly log scale chart on silver, this monthly candlestick. Can we close back above 50 and above this resistance line? So that was one of the two most important charts to watch for the month of October. Well, here's the second one right here. And I just want to give the caveat. I'm very bearish on the dollar over the long term. I'm about as dollar bearish as you can get and about as precious metals bullish as you can get over the long term. So I don't want to sound like, I'm some kind of precious metals bear and dollar bull. Not the case at all. However, almost everyone and their brother is bearish on the US dollar over the short term, and conditions are ripe for a bounce in the dollar. Also, the technicals suggest that as well. So here's this long-term chart of the US dollar. You can see this goes back to 2008, and this is about as clean of an uptrend channel as you can possibly get. Every time we've gotten up to this resistance, we've fallen back, and every time we've tested this support for the last 15 years, we've bounced multiple times. And we're testing, coming into the month of October, we're sitting right at that support line, and we're bouncing. The dollar is up so far almost 2% on the month, bouncing right from that support. Now, a bounce in the dollar would catch many by surprise and would be a headwind for metals. Now, there is some precedent for the metals and the dollar to rally in unison. That could happen. But more often than not, the dollar is a headwind to the metals. And just as we've seen the dollar kind of plunge here in 2025, well, that's coincided with a rally in the metals. So I think the opposite would be true if the dollar were to bounce here. Well, then that would be, the case for some more weakness in the metals, which is opportunity for people who have taken profits and raised cash. If you've got cash available, bring on the dip, bring on the downside, because I think any dip that we do see in silver and gold are dips that are to be bought. I think institutions, hedge funds, trading algorithms are in a buy the dip mode, and I'm personally in a buy the dip mode too, where you can make a case for the last handful of years, before this kind of up move, a lot of algorithms were in a sell the rally mode in precious metals. Well, I think everyone and their brother is in a buy the dip mode. People want to get exposure to this rally, but they don't want to chase. So pullbacks are for buying, in my opinion. And I think we could get a really nice buying opportunity. Two cohorts of investors right now, right? There's a lot of people who saw this big move, especially from $40 to $50 silver. That happened fast. And there are people who wanted to get on board of this train, but they just never got a pullback. So they've been waiting for a pullback to get some exposure. Well, now here's their pullback. So I think that's what's causing this bounce here. People who want to, jump in and buy the dip. Well, I think there's another separate cohort of people who are perhaps way overweight precious metals and never took any profits along the way. And then they had kind of, a scary moment here this last week or two with these big sell-offs. And they said, shoot, I should have sold some. Well, I think those people are likely to take profits into strength. So all that to say, what I think is a potential path here, and is kind of my baseline roadmap, is we get a bounce up here towards 50 and then make a lower low. I actually put on a short-term trading position here just 2 days ago, sent an alert out to our members on Tuesday. So we entered a trading position in silver miners, but this is a quick trade. I think we bounce up here for if that does come to fruition. And if it does, man, what a buying opportunity that would be. Look at this strong confluence of support right here at 35, just below the 200-day moving average. So anywhere between 40 and 35, I'll be a pretty aggressive buyer in silver. Maybe we don't go that low. There's also support around 44.
Is it mainly the aspect?
Steve Penny lays out a tactical short-term roadmap amid the recent volatility in gold and silver. While he remains deeply bullish long-term, he notes that the current setup in the US dollar suggests a temporary bounce, one that could pressure the metals in the near term. Historically, when the dollar rises, gold and silver tend to pause or pull back, offering disciplined investors the buy-the-dip opportunity they've been waiting for. Penny expects a potential retest toward the $40 to $35 silver range, calling it the sweet spot for accumulation before the next surge. The broader message: stay strategic, patient, and unemotional. Pullbacks are not the end of the bull market, they're its invitation. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos.